welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the latest trends on the stock markets, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade as well. What we'll also do is get you expert views on some of the stocks that are buzzing the most in trade today. Two stocks that are rallying 10-20% in trade are Bombay Burmah and Bombay Dyeing shares. What is the reason behind it and what should be your strategy here? We'll find out that. And of course, the earnings season continues as major FMCG giants report their earnings. ITC HUL also came out with the earnings yesterday evening after Nestle had reported during the market hours. We'll get you an understanding of what is really going on in the FMCG sector and which is the top stock that investors are still betting on after the earnings as well. First up, a quick check as to how the markets are doing at this point in time. Another down day. Remember, 2 days in a row, we have seen that the markets have ended lower. And it's the third day when the markets are trading weaker in trade, the last trading session of the week. And we are seeing that the Nifty has now slipped below 19,550 mark as well. It's trading 0.4% lower, down about 83 odd points at this point in time. Now, when we talk about the top losers in trade today, remember ITC comes up as the top laggard, 2.4% lower in trade. You also have HUL from the FMCG pack that's down. Both of these stocks reported earnings, and after that, they have been on a declining trend. L&T, BPCL, Hindalco, these are the other laggards at this point in time. On the other side, you do have a few stocks that are still buzzing in trade, like Nestle, for example, after the earnings yesterday and the stock split announcement, that's trading higher in trade. So there's a divergent trend that you can spot in the FMCG space. You also have the banking names that are coming back into flavor. Remember yesterday, they were down in trade, but Kotak Mahindra Bank, IndusInd Bank, these are the stocks that are pulling up the index. Also, SBI Life and TCS, these are the other movers at this point in time as well. Sectorally speaking, now when we talk about the kind of move that we are seeing below the surface, you will clearly be able to find out a lot of sectors that are still moving up in trade despite the overall weakness. So private banks is the one that clearly stands out as the index in the green, but rest of the sectors have now all slipped into the red, with sharpest declines being seen on PSU banks. So here is a divergent trend. PSU banks 1.5% down, but private banks holding up in trade. But you do have consumer durables, oil and gas. You also have the pharma index, the metal space, all of them cracking, and the FMCG space also down by 1.3 odd percent. So largely, it's a broad-based sell-off kind of a day that you're witnessing on the markets. Even on the broader markets front, say the small cap 100 index, that's down by 0.7%, or you also have the mid cap index that's also lower in trade. The large mid cap 250 space is down by 0.6%, or the mid cap 100 space, that's down by over 1%. So the broader markets are actually feeling a deeper pinch beyond the narrow markets as well. But time to welcome our guest on the show. Kranti Patini now joins in. He's the Director Research at Wealth Mill Securities. Welcome, Mr. Patini, and thank you so much for taking the time out for this discussion. I want to begin by first understanding your take on the markets. 3 days in a row, and the markets have been slipping lower. We had touched 19,800 and beyond, and it was looking very promising at the start of this week that the markets may once again start to be in an uptrend, but volatility took over, and we did see the markets now slipping below 19,550 mark as well. What are the crucial levels you're watching out for, and your own take on the markets?
Yes, actually, markets are this week in a downtrend after rising to the level of 19,850 range. That's where the markets witnessed a strong resistance. But there are a couple of reasons. One is the domestic economy is quite strong at this point of time. But the news that is coming from the overseas, the overseas news, the geopolitical environment outside the outside the world in West Asia, and also rising crude oil prices also creating pressure on markets at this point of time. In fact, the global index is also creating pressure on Indian markets at this point of time. That's where we can see Indian markets getting into a range bound right now. But what we can sense is during the trading day, at the bottom of the markets, okay, when the markets after the correction, we can see some kind of buying interest is emerging. It's not a something like a vertical kind of fall. We do see some kind of selective buying that's emerging in Indian markets. That's where we can see the level of 19,500 at this point of time. We can see 19,000, the previous support level of 19,450. That can be the uh, that can be the uh, support level at this point of time on a short-term perspective. But the crucial thing is 19,200 is the strong support zone. That's where we are watching. Anything below that, it can create some kind of extra volatility in the market. But at this point of time, the trend is in a uptrend only. But the global events can create some kind of knee-jerk reaction in the markets. The domestic data is quite strong. And today morning, there is a statement from IMF stating that India's contribution in the global growth by 2028 can be significant. It can be in an upward territory. So the long-term IMF is a very conservative agency in terms of their reports are concerned. So such a conservative agency is coming up with these kind of strong growth reports, okay, which will create a good emphasis with respect to the Indian markets for the institutional and foreign portfolio investors are concerned. So at this point of time, I still reiterate any dip on Indian market can be a very good opportunity for the investors. Of course, there can be the other events also can be there, but for a long-term investor is concerned, it gives a good opportunity. And markets are in a range bound at this point of time. So some kind of extra incremental profits any traders makes, it also a narrative for the traders to book some profits also at a higher range.
Okay, let's discuss some of the stocks then and then understand where exactly are you positive on. There are two stocks I wanted to discuss at the outset. One is Bombay Dyeing. Now, this stock has extended its gains, in fact, for the fourth day. It's up 10.8%. In the last, this year itself, so far, 118% kind of a move is what we've already seen on the stock, and the stock is right now trading around 174 odd levels. When we also talk about Bombay Burmah, the shares are in the green for the second day today. This year, the stock has moved up 52%, and today it's up on a 20% upper circuit at 1419 odd levels. Could you reason out to us what is the reason behind which we are seeing such sharp moves on an intraday level for such stocks? And is there a trade that one can chase here?
Yeah, the news is came out, Sakshi. One thing is Bombay Dyeing holds a strong land bank story in the middle of Mumbai in the lower Parel, and the deal is getting executed at this point of time for a humongous price point. So that can increase the cash flows of both the companies, Bombay Dyeing and Bombay Burmah, okay, which are the Bombay Burmah is a holding company also. So that's where the buying interest is coming back. But just to envisage the stories of these land bank stories, of late, Indian real estate reality stocks have been doing very good in the past 1 year. The reality companies also, and last fortnight, what we can see is some kind of rally in the land parcel stories. Like the same stories, just for the investor information, education purposes, stocks who are holding the land banks like J-Corp and Hemisphere Properties. Today, even Hemisphere Properties also went up by 10% today. So these land bank stories also attracting the buying interest from the investors at this point of time. That is the only reason for some kind of heightened momentum in these stocks at this point of time, Sakshi.
So would you be recommending one? Is this momentum or leave it?
It's not. It is for the only high risk appetite investors. One need to exercise strict stop losses. The news is already out and it's in the public domain also. So I think much of the best cream is over with my sense at this point of time.
Sure.
There are some other interesting stories are available for the investors at this point of time. To get into these kind of at these prices is a risky bet for the investors at this point of time.
Okay. Let's also discuss the FMCG space that's come back into flavor after the earnings have been reported yesterday. Nestle reported its numbers. And also, the biggest talking point was the stock split of 1:10 that they had announced. And this is for the first time ever. And this would definitely give a great entry point for a lot of investors who'd been waiting with bated breath for the prices to cool off. Now, this could be an interesting move that one could track. But after that, we've also seen ITC and HUL report their numbers. ITC shares are under pressure after the Q2 earnings. We've seen it as the top loser in trade as well. In the last 1 month, the stock is down about 3 odd percent. And while if you talk about the last year to date level, it's actually gained about 32 odd percent. So it's still in the positive. But we have seen in Q2 that the company reported 6% growth in the consolidated net profit at 4955 crores. Even the revenues from operation in Q2 rose by about 3.5% or so. The Jeffries has given a 530 kind of a target. Prabhudas Leeladhar has given 492. Motilal Oswal has a 535 kind of a target. But earlier we were also looking at 600 plus kind of targets coming in. Is there anything in the earnings that should caution the investors after the stellar move in the last 1.5 years we have seen for the company vis-a-vis the earnings?
Yes, actually, it's a decent set of numbers if we analyze the data of ITC. But the best of the news has come out with their with the demerger of the hotel business, and at this point of time, the overall market weakness also impacting the stock price at this point of time. It's a decent stock to hold on to the one's investors portfolio, which can give and reward the long-term investors always, even the medium-term investors also. But it's not the time for the medium-term. Definitely, ITC at this point of time can deliver the target prices what you mentioned with a year, with a 1 year perspective from this level. Today, there is a general market weakness also impacting the stock price at this point of time, because it's a retail stock owned by the majority of the investors. Some kind of selling pressure the stock is witnessing at this point of time. But for a longer term investors, definitely one can hold the stock still can deliver mid-teen returns from this level on a compounded basis also. Of course, here and there, some kind of consolidations will be there. In terms of the business model, business segment wise is concerned, cigarette business has been good, and hotel business also have delivered decent set of numbers with respect to their consolidated numbers, where the slight sluggishness from the paper business and FMCG also decent set of numbers at this point of time for ITC. Definitely, it's a stock to hold, and for a longer term investors, definitely to buy at every dip for the company, because the cash flows are quite strong for this company.
Okay, if I ask you to choose between Nestle, HUL, and ITC, how would you go along? Especially for HUL, we both seen for both HUL and ITC, in fact, that the Q2 performance has reflected the challenges being faced by the industry on volume growth, on high competitive intensity, the weak rural demand as well. We've also seen while the ITC diversification of the business was able to somehow cushion the numbers because it has hotels, paper providing cushion to the earnings. But for HUL, the full impact of the earnings was actually higher compared to ITC over here. The solace, however, for the companies came in from declining raw material prices that supported the margins. But both the shares are down in trade. Only Nestle is up in trade. How would you navigate between the three of them?
Sashi, it's a very tricky question to choose among these three in FMCG radar. But I try my bit. HUL always for a longer term investors, pure FMCG player, and also the domestic growth story and domestic consumption story that what reflect in HUL. It's a pure play for the India's consumption domestic story. Coming to the point with respect to Nestle, they have the dairy business, the other products that they contribute for Nestle is concerned. So the stock was a laggard earlier, but we can see some kind of buying interest and earning interest is coming back with respect to Nestle. The stock split also made some kind of that is needed, because the retail investors, it's a little bit obstacle to them to buy the stock at paying from 24,000. So stock split can be create some more buying interest to hold such a strong corporate governance company in individual's portfolio for a longer term perspective. So the first is for a moderate investors, okay, HUL and ITC can be, and for a little bit slightly the risk appetite is high, one can choose Nestle also for a longer term perspective. By and large, all the three stocks have a tendency to deliver decent set of numbers. They might miss relatively 1 to 5% divergence will be there in terms of their growth prospects or concern in terms of the stock price. But by and large, they will go hand in hand on a longer term perspective.
Fair enough. Well, many thanks, Mr. Batini, then for being with us on the show and discussing all these insights with all our viewers. Markets still subdued in trade. Broad-based sell-off is what you can spot. As far as the FMCG space goes, ITC HUL for the medium risk appetite investors, while high risk appetite investors can go for Nestle. That's the advice coming in from Mr. Batini right here. As far as the FMCG strategy goes, post the earnings this time around. We'll keep an eye out on both the earnings and the market movement for you, and you can track all of this with us on Business Today Television. So don't forget to subscribe to our channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.
Pixel's innovations has been